everyone, welcome to Sensa Edge. I'm Zoheb, your founder of Sensa Market. Good morning and welcome to Sensa Edge. In this video or the podcast, we're going to discuss the latest market news, movements, and how best to trade them. This podcast is your ultimate trading companion, delivering actionable insights, market trends, and powerful option strategies right to your ears. At Sensa Market, we got like 100 plus option strategies. It's as easy as pick any particular strategy, pick a company. You'll be able to visualize this much more easily. You know where your profit loss looks like, and you can easily trade them. Again, in this particular podcast, we're going to help you, again, retail traders, to make informed decisions and capitalize on opportunities. Whether you're new to trading or a seasoned pro, this podcast will give you the edge you need to succeed. Listens to us every Tuesday and Thursday. In this podcast today, we're going to cover buying the dip. What's happening in the market? Today, we are going to talk about the broad market for a moment. The S&P 500 has entered our caution zone, trading at 5% off the high. While this is certainly a normal occurrence, it usually leads to one of the two outcomes rather quickly, right? This level is often seen as an inflection point in the market and will often lead to institutional buying or selling rather than sitting around this area and muddling about the index trends to either immediately bounce back or immediately sell off, depending on the position and bias of the institutional money. Let me bring up my screen and kind of like go over in detail and talk about like what strategy will work best for this SPY and why we're gonna work this particular strategy. We're gonna talk more and deep dive into this. Let me bring up my screen here. You can see my screen. Again, this is the platform, sensamarket.com. Here, I'm going to pick the SPY and check on the stock. Currently, SPY about $581.39. Again, as we spoke, right? This 10% level is even more significant and is known as the correction in the market balance. If we breach the 20% level here, this is the official line in the sand for a bear market. Bear markets tends to be extremely volatile with different strategies needed to deal with unique risk that comes with the environment. Many other ETFs are already well into the correction or even bear territory already. Small caps, it could be like international, real estate, preferred, few of the some in fixed income sectors, all in correction or bear territory. But then again, SPY might be the cleanest stock in the dirty clothes hamper. I don't know for sure, right? Let's jump in and what strategy would work best here. Let's jump into that. Again, in this particular thing, if you jump into the option strategies, you'll be able to see all the 100 plus pre-built strategies right over here. As easy as pick any of the single leg strategies, starter, income, debit spreads, credit spreads, condos, straddles, triangle, butterfly, you name it, pretty much it's out here. Again, in this podcast, we'll also be covering what strategies and why this particular strategy will work best in the current market scenario, picking up each of those specific example as needed. In this today's topic, we're going to talk about SPY. I'm going to talk about the tool here. Let me jump into the long call and then later jump into the strategy and we'll build that particular strategy. Again, very simple. If you're completely new, again, pick any particular of the strategy. In this case, I pick long call, very simple. SPY, which is trading around 581.39 cents. I'm going to pick something 10 days into the market, Jan 23rd. This is the expiration date. You can change any of those expiration date. And I can pick what would be my strike price. In this long call, I'm telling that anything above this 581 strike price, I'm going to bet that this particular SPY is going to be higher by this particular expiration date. I can adjust my strike prices accordingly here. And if you see the graph below, it kind of visualize and gives me that where my profit lies. The y-axis is where the profit loss is. in this particular scenario, for example, let me go back to 582, for example, for like 3 days expiration on Jan 16th, right? If anything above 586, which is the break even in this case, you're going to be making a profit. The green is where the profit is. If it goes to 590, where I'm pointing my particular cursor or mouse, I'm going to make $373 profit over there. But anything lower, in this case, if the break even is not 586, I'm going to be at a loss. The maximum loss in the long call is capped to the debit which you would be paying to enter this particular strategy. In this case, again, this is the strike I choose. Anything $447 is the debit. That will be my maximum loss. If the SPY continues to rally above, then there's going to be a theoretical maximum profit. As I change this particular strike price, you can see my debit, loss, profit, break even change accordingly. And also the net code, which is coming in real time. What is my code to enter this particular strategy? And we'll also be deep diving into each of the Greeks in the upcoming podcast and learn more about that in much more depth and detail. As I said, all the strategies is built right here on the left side. I can pick those strategy, I can change those strike prices, adjust that, and I can connect with the Tradier brokerage. If I connect with the Tradier brokerage, I can hit on the place order button and then easily trade. So I need to connect this to Tradier brokerage. Moving back to the strategy, what we're talking about, right? All right. So as mentioned, S&P 500 is sitting at an inflection point, which often goes somewhere rather than nowhere. This gives us the opportunity to trade volatility, which like stock can go both the ways. If you want to shoot for both the ways, there are strategies and Condor, like very simple and one of the most popular four-leg strategy, option strategy is Iron Condor. Kind of like have the four-leg strategy here. The market, in this case, again, right, the option market says XYZ is going to move X amount by Y date in either direction. We can bet that there are underestimating or overestimation, or underestimating or properly estimating. In this case, we'll assume that volatility will be higher than expected due to our expected movement to be higher than what's currently priced at. So given that SPY is down, we are going to look at the bright strategy in this case is going to be a reverse Iron Condor. I'm going to talk about why it works, right? I'm going to give you three things why it works. The market doesn't price in a hard bounce or a hard sell-off after a movement like this. The option market still suggests complicancies. We are betting that this isn't the name of the game right now. The cost is variable, so positioning, sizing is easy to dial in. The underlying has extremely high liquidity, so transaction cost and slippage are minimal. So let's build what strategy could work really well. So let's take at a lower expiration date. In this case, let's shoot for end of the week, Jan 17th as my expiration date. I'm gonna currently SPY is at $581. It's a four-leg strike price, which is pre-built right over there. I'm gonna start building the strategy. I'm gonna move this around. I'm gonna sell to open at 560, which is a put position. And then I'm gonna do buy to open call position at 565. Gonna do buy to open call position at 590. And then sell to open at 595. I'm spreading my wings over there. Adjusting this, as I adjust the graph accordingly, you'll be able to visualize where the profit looks like and where your red zone is. That means where the loss currently is. In this case, to enter this particular strategy, the debit is $142, which is the code, which is $1.42. The maximum profit in either of the case is $358. If the particular strike goes less than 563, or if it goes more than 591, you're going to be making a profit in this particular case. Again, since your loss or a debit is capped at the debit price, the profit is also capped at a maximum of $358. Again, the strategy makes it easy and clear to kind of like look around. If you think that this is probably not the right strategy, you can easily navigate to different strategies right on the left navigation bar. If you just want to flip this into an iron condor, you can click iron condor and then flip exactly, and you say that the break even is going to lie between this. I'm going to make profit in between this particular area, and anything below this particular 563 or above the 563, I'm going to be at loss. So that's exactly the iron condor. In this case, I can go ahead and hit the place order button, and through the Tradier brokerage, I can easily submit my particular trade. All right, so wasn't bad, right? It's pretty easy, very direct, easy to use particular tool in this particular strategy. Again, today's topic was how to use and take advantage of the assumption of SPY. I'm gonna come myself on the screen here. Again, if you believe SPY is poised to make a large move, you can certainly, as I said, right, you can go into the iron condor versus the reverse iron condor. Please note that when you do that, the risk reward values flip and the position size accordingly and trade safely. Today's topic was how to take advantage of the assumption that the SPY will continue to trade normally and without any large moves in either direction. We can use, of misunderstanding, the reverse iron condor to express that view. Next time on Sensa Edge, we can deep dive into many other strategies, and depending on the market scenarios and the market condition, we're going to pick every single time a different company or a stock, right, to look at that. Again, thanks for watching. Be sure to subscribe, follow us on this particular platform. Thank you all. Happy trading.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.